Hey, as a contractor, is there anything really more important than your construction equipment? Maybe it could be argued your employees, sure, and your operators, but second to that is your equipment. And if it's not running properly, you're going to lose money and not be able to get jobs and complete them in a timely fashion. So in this video, I want to share with you the difference between replacement cost and actual cash value and why it's so important for you to know that. Hey guys, Mike DeSalos here. Welcome back to the Business Insurance Playbook. Our goal is simple here to help you become a better buyer of insurance. I have over 13 years of experience as a commercial insurance agent helping businesses buy insurance better and to win the business insurance game. My goal is to help you do that through these videos. If you like our content, give us a thumbs up and subscribe. We appreciate it. First, let's discuss replacement cost. Replacement cost would be considered more like the Cadillac version between the two, right? It's more preferred than actual cash value because it's broader coverage. What replacement cost means is they will replace your equipment with like, kind, and quality. So if you buy a $90,000 piece of equipment, they're not going to take into account depreciation if it's ruined in a fire or it's stolen. The insurance company is going to spend what they need to replace it with like, kind, or quality. What actual cash value is it's a type of coverage that's going to replace your equipment, but at a depreciated basis. And so if you bought that equipment for $100,000 5 years ago, and after depreciation, it's now worth $60,000, but you lose that whole piece of equipment, you're only going to get $60,000 from the insurance company to replace that piece of equipment. Another term that's used interchangeably with actual cash value, but can be very confusing, is market value. You hear the word market value and you might tend to think kind of replacement cost, but that's not the case. Market value is actually just like actual cash value. So if you have a policy that has your equipment valued at actual cash value or market value, keep in mind you're going to get equipment replaced to you on a depreciated basis. So I want to close out with two quick tips when buying insurance that you need to know. The first tip is that a lot of carriers will push you towards actual cash value. That's what they prefer. Now, there should be a lesser cost for that, but there is a way, if you talk with your agent, to get replacement cost basis on your equipment, and there'll just be a little caveat. You can sometimes push back on the underwriters and say, can I get replacement cost at least on equipment that is 10 years or newer, or if they don't allow it to go to 10 years, you can say at least 5 years or newer. This is a good kind of happy medium where your newer equipment is at least covered at replacement cost and your older stuff will still be stuck on actual cash value basis. The second tip to know is that if you do have equipment that is covered on an actual cash value basis or on a market value, you need to make sure that every single year you're going through with your agent and you're depreciating your equipment, right? You don't want to be insuring your piece of equipment for $100,000 if the actual cash value basis is really $50,000 because your insurance premium is based on your total limit. So this is why it's critical that every year, if you have coverage for your equipment on an actual cash value basis, you depreciate it so you're not overpaying for insurance that you're never going to use. Hey, if you found those tips helpful, do us a favor, give us a thumbs up, hit the subscribe button, and we'll see you next time. Thanks.